Wow. That was the longest I've ever seen StreamYard think about it before putting us live. StreamYard, are you okay? Yeah. All right, y'all. Got a lot to discuss. Haven't got a lot of podcasts from your boy lately. Trying to spend a lot of time with the kids during slow season. It's usually the smart thing to do in this business. Usually you're so busy, you hardly have time to go to the bathroom. So when those times are gone and there's slower times, that's when you guys spend time with your kids. That's when you got to take your vacations, although we haven't taken any. And so I've been trying to do that. But there is a whole lot on the line here the next 6 months or less. And I'm starting to see patterns in the marketplace. It's always revealing and interesting to me to recognize the patterns that take place, the sociological patterns, meaning that humans as a whole, completely removed from one another, will make a lot of the same decisions and unfortunately the same mistakes. And so I'm seeing a lot of that. So we're going to talk about election implications in the markets, and then we'll go through real estate, stocks, crypto, tell you what I'm doing, tell you what I'm recommending, and try to drop as many nuggets as possible as we drive through this. So when we first take a look here at just overall the election as a whole, obviously presidential elections are always a big deal. And if you listen to certain stations on either side, they'll tell you it's the most important one and that everything's going to hell in a handbasket if it doesn't go the right way. Well, kind of feels true this time, to be honest with you. But what are the odds? I don't like to look at polls. I think polls are BS. I like to look at the betting odds. That tends to give a clearer picture of what's going on. But as of right now, since things have changed a lot recently, we don't know really where we stand on this. Here's what we do know. They tried to assassinate President Trump. We know that. We saw that. Got shot in the ear, cut it half an inch away from blowing his brains out on TV. Too much weird stuff surrounding that to make it feel like, oh, it's just a random 20-year-old crazy guy. Too much random stuff, just the vantage point from which he shot from, the fact that the Secret Service knew about him 20 plus minutes before President Trump took the stage. There's just too much weird stuff there. The fact that Department of Homeland Security and all the government agencies who were supposed to be supervising all this refused to testify to Congress. Just weird stuff. Now, the head of Secret Service, she did testify, wouldn't answer a bunch of questions, just very cryptic, not the way that you would expect the government. If they were truly involved in the best interest of the person they're trying to protect, you would think they would be open and honest and say, hey, how can we help? What can we do? Opposite. They're like, nope, not saying a word. So just creating a lot of question marks that are bad question marks to have regarding that whole situation. And one thing we know is that the powers that be like war, and Trump gave us 4 years with no wars. The first time in 40 plus years had a president that didn't start a new war. And they know that he's going to end the wars that are existing right now. It's high on his agenda. And so those people are trying to take him out. That's what's going on. It's pretty wild. Wild to watch it happen in real time. Then we again, yesterday we get the thing with Joe Biden tweeting that he's resigning as president or, removing himself from the race. But I don't know if anyone's seen him or not since then. We do know that the signature on that, there was no presidential letterhead or presidential seal. It was not on the White House letterhead either, the letter that was tweeted. And it did not have his actual signature. At least we compared his signature to the last 5 executive orders, and it was definitely not his signature. So just weird stuff. Weird stuff is going on. What happens when all these weird things are happening and they're being talked about in the news is that it causes people to freeze a little bit. And I think that is going to ultimately be sort of the theme here. A lot of people are saying after the election, punt, punt, punt. I'm not going to make any decisions till after the election. We're not going to do this until after the election. I'm not going to take the new job till after the election. We're not going to buy a house till after the election. People want to kind of get through that before making any decisions because they feel like it's a fork in the road. Come to a fork and we're going to go this way, we're going to go that way, but they're drastically different directions. And I think that's probably accurate. So as far as, and then, so we have the Biden pulling out of the race. And then instead of there being any kind of democratic process, Kamala was just crowned as the as the person to be the nominee, even though she hasn't received a single vote. So a lot of my friends that are hardcore Democrats that vote Democrat all the time, like, wait a minute, I didn't choose her. I would have chosen her. That's not who I voted for. And so they're kind of up in arms about that. And I understand that too. So, like I said, there's lots of weird things. Now, these weird things that take place, especially when they're this important, this big, they're going to cause people to make decisions around it. People will say things, people will do things. I'm going to show you a chart later specific to real estate and the dramatic drop in international investment in United States real estate. And we can kind of look and draw some timelines on that. So we'll take a look at that. But the impact of who wins the presidency is obviously huge, for multiple reasons. But mostly, we're just talking about financial markets. Obviously, Trump is the much better candidate. If you want stocks, crypto, real estate, if you want everything to go up, if you want a weak dollar, and prices to go higher on assets, Trump's your guy. If you want more taxes and regulations and sort of more big government stuff, more tax dollars to go to illegals and whatnot, then you know where to go with that. That's really kind of what it is. So will it impact the markets? 100%. Will it impact what the Federal Reserve does? Not historically. So historically, what's going on with the presidential race? Not going to impact what's going to happen with the Fed. The Fed is really just sort of gearing up. They're clearing off the desk, ready to start putting some rate cuts on there. And that's coming. The quantity and the quickness of that is hard to say. But if we zoom out and look at it like the Feds do and say, okay, over the course of the next 2-3 years, we're likely to see much lower interest rates. We don't have to. It doesn't have to work out that way. But that's what we're likely to see. And so we can kind of gauge things based off of that as being an expectation that we've seen the cycle high. We have a double top in interest rates. We got to 8% twice. And that was where the market became exhausted. That was where bond buyers stepped in. When the coupons were getting to 7+%, the bond buyers were stepping in a big way. And so that marks the bottom in the bond market and therefore the peak for interest rates. I don't think we'll see those levels again. I don't think that's even really a question. We're going to look at the mortgage bond chart here shortly as well. We'll look at all that stuff. We're going to look at Altos research chart, a whole bunch of stuff. Okay. So one of the things that's we're doing, and I'll tie this back in later when we get to crypto, which will be the last thing we do today. So Trump has been in meetings with people who are the intellectual high-level Bitcoin individuals and miners, and they have got him completely orange-pilled. He's actually mentioned, and he's speaking at the Bitcoin conference this week, and he's hinted at the idea that he would make Bitcoin a strategic reserve asset for the United States. Now, this is every Bitcoiner's, just dream scenario. The thing that we've dreamed about, prayed about, hoped for, this is it. If the United States Treasury is buying Bitcoin as a strategic asset for reserve purposes, in other words, just to hold it, to never sell it, but just to hold it forever. Other nations who've already started this, more will do it. And this is how you get Bitcoin in the millions of dollars. So there's a big faction of Bitcoiners who are behind the election. Trump, will that happen? Will he be able to do that? Is it something that even can be done? We don't even know. But most people are just like, hey, we got a presidential candidate who's leading presidential candidate talking about buying Bitcoin as a strategic reserve asset. That's as good as it gets. Green light, let's go. But Bitcoin hasn't done a whole lot since that came out. So that's interesting. We're going to come back to that. That's one of the big things on the ticket as well. People have been asking me about China, and I want to talk about this. So there's a real estate crash that's going on in China. There's actually kind of an economic collapse that's going on in China. Why is this happening? Some people have asked me, hey, real estate China's collapsing. Now, I know they're getting this from YouTubers. I know it. I know it every time. Hey, I heard the real estate market in China is collapsing and the United States is next. Is there any truth to this? let's look at what happened in China, and let's talk about the real estate market. So what we're going to cover next. We're talking about the real estate market, mostly in Southern California, but I'll talk about nationally, and we can talk about just overall. So China's gearing up for its third plenum. What's this? This is like their sort of strategic meeting. It's a policy meeting that they have in China, similar to like the Fed meeting, but they don't have like the Fed set up there. And you can see they admit this openly. Let's see, where was it? It says like the first thing they said in here: China's real estate problems may be massive. Okay, just right out the gate, the first part of the article. Okay, why is China's real estate problems massive? Okay, you have two things. Number one, China was overbuilding. They would basically just take clear spaces and just build up huge communities that no one ever bought anything for. It's one of the weirdest things I've ever seen, but they wanted to be able to say they were growing and say they were building. It was like, if you build it, they will come, but they didn't come. So why didn't that happen? China's a different culture than what we have in America. Household formation does not happen at the same rate in China for two big reasons. Number one, you can only have so many kids in China, right? They won't let you just have innumerous kids. You'll have so many. And it's known that you shouldn't have too many kids, and that there's already too many people, and you shouldn't keep having so many kids. And so you can't have as many kids as you want. So they have less children, a smaller following generation, which reduces household formation all on its own, but also the culture. Families will live together. So think about this. Think about the family. Think about the house you grew up in. How many people were in that house, that lived in that house? And how many houses do those same people live in now? For me, it was me, my sister, my mom, my dad. That's four of us. Today, we live in four different homes. Same four people, but four households instead of one. That's household formation. And the more household formation that you have going on, the more demand you have for housing. Well, in China, families of seven will live in a one bedroom. In Hong Kong, they'll live in like 150 square feet. So just culturally, that's how it is. You stay with your family. You all live together. You don't separate. Here, we're different. In America, we're told you got to get out, spread your legs, spread your wings immediately. Spread your wings immediately. If you're 18 years old, you got to get out there. Get your sea legs. And I did it. My wife did it. A lot of us do. That's the way we operate in America. In China, they don't do that. So they overbuilt, and they don't have any real household formation. So they got themselves in trouble almost on purpose. It was sort of like if you build it, they will come, just hoping that it would work out. They'd keep the wheels churning on the building. A lot of people were telling me about Evergrande. Remember that? That was a collapse, a real estate collapse, a construction company collapse. Happened how long ago? A year, 2 years ago? And everyone's telling me, oh, this is going to melt everything. Did it? And I told the people who were telling me that, no, slow your roll. Things don't just roll uphill like that. Remember, China's still downhill from us. We are not downhill from China. So like problems in China does not equate problems here. Problems here equates problems for China. They rely on us to buy their stuff. And we rely on them to make stuff cheap, right? That's how the relationship has always worked. So don't expect that anything that's necessarily going wrong or bad in China is bad for us, because things don't roll uphill, they roll down. So keep that in mind, okay? Now, on the same time, people are seeing, this is the headline. This is the today headline for real estate. This is actually front page CNBC. June home sales slump, pointing to a buyer's market as supply increases. How many negative things can you fit in 2 lines of a headline? Home sales slump. Okay. Buyer's market, pointing to buyer's market, and supply increases. Okay. So what's going on here? Well, let's look at what this actually means and how it applies to what's taking place. So sales of previously owned homes dropped 5.4% in June compared to May. So month over month, the total number of homes sold dropped by 5%. Okay, less transactions. And this is really what's going on right now. Just less transactions. I honestly, as a mortgage guy, I've never had this much free time. I've never been so not busy before. The last time I was this not busy was 2011, 2012, when we saw, I was on the radio at the time and, still had my mortgage company in the background, still involved in the mortgage business, not as a loan officer, but this is when I saw how slow the business was. And it reminds me of that very similarly, except the difference is there was so much more inventory back then. So we had so much inventory. It was wild. Agents would come into my studio and say, I've got 12 listings, can't find a buyer. If I could just find a buyer, I could sell a house. I mean, it was just a totally different game. So we're talking about sales dropping 5% month over month. That is a pretty big amount. Okay, let's acknowledge that. It's a big amount. Inventory jumped 23% from a year ago. So inventory is up. However, the median price of an existing home sold in June, so last month, is an increase, 4% year over year. So how could this keep happening? How can we keep getting all these bad numbers, but prices refuse to go down? We're selling less homes. There's more on the market. Still, prices go up. Why? There's only one thing you need to understand. What's your alternative? Right now, I'm seeing and hearing a lot of people making this decision. We decided to rent this time around. When you rent, remember, you're basically shorting the real estate market. You're betting against it. You're saying you think it's going to get worse. And so if a year from now, when your lease is up, if prices are higher or whatever, then you've really lost because you spent all that money on rent and you missed out on the appreciation. So people are making the decision to rent very, very lightly and not really thinking about what the macro consequences are, because here's what I believe is taking place. And we're going to talk about mortgage rates next. Everyone's waiting for the same thing. We're piling up to the right. Everyone's pushing to the right of the timeline, piling up, waiting for the exact same thing to happen. Wake up in the morning and rates have dropped. Rates are down to the 3s today. Get out there and go buy a house. Everyone's waiting for the same thing. Waiting for the same thing. You know exactly what that means. We know exactly what that's going to lead to. It's going to be bananas. What's the benefit to waiting until rates go down? Is it possible that you could get a lower rate while prices are still slumping? What we saw, and actually this is probably the best article for this. Falling mortgage, this is Redfin, falling mortgage rates, rising supply. So they're acknowledging both things, but notice the way they phrase it. Creates opportunity for home buyers. Okay. Now Redfin's very pro real estate. But notice the difference in the two headlines, pro real estate. And would you say that CNBC is pro real estate? Or does this look like an anti real estate headline? It's the same information, saying the same thing. One is saying, hey, this is creating opportunity for home buyers. What's the opportunity? Even amid record high prices, what's the opportunity? The opportunity is to negotiate. The opportunity is to get in at these prices. If we are seeing more inventory and we are seeing less transactions, that means there should be less competition, which means more opportunity to negotiate. Now, mind you, one of the things, there's two things that make it difficult for home values to go down. Number one, the way homes are appraised. The way homes are appraised, they're looking at the past. So when prices have been going up, your comparable sales are going to look good. They're going to look really good, right? So when you get your appraisal done, it's going to look like the home is worth what homes have been selling for in the past, in the recent past, but in the past. That makes it more difficult for values to go down. Also, when the alternatives are not drastically better. So for example, if you're selling a home in this market, you're either going to rent or you're buying another home. If you're going to rent, you're going to find out very quickly that they're just like buying. There aren't very many options and they're very expensive. If you go to buy, you'll find that there are getting more options, but there still aren't very many options and it's very expensive. Housing is just very expensive. It's not going to get cheaper. It's going to get dramatically more expensive over time. Dramatically more expensive. Over the next 5 to 10 years, housing will become dramatically more expensive, not just to buy, but to rent as well. And so what Redfin is saying here is there's an opportunity for home buyers to get in and buy something and negotiate. And hey, guess what? If we're right about rates dropping later, you can refinance later to a lower rate. But whether rates go down or not, as you can see, prices continue to push higher. Now, not everywhere. This is on average. So some places will be slumping more where there's more inventory. Some places, prices are still raging. In San Diego market, it's really dependent upon the listing. What kind of listing do you have? If you have a really sought after listing, you're going to get 10, 12 offers. If you have one that's beat up a little bit, the seller maybe didn't really get it ready for sale, that one's going to sit. So we have this dichotomy going on, which is really, really interesting. We're going to take a close look at the San Diego market here in a second. This one's just a somewhat interesting read about how mortgage rates are falling and when buyers would take the leap. At what point would buyers take the leap? There's some interesting information here. I'm not going to go over too much. Okay, before we talk about the San Diego market, let's look at this. So one of the things that has happened, and there's the wrong way to look at this and there's the right way, and I'm going to tell you both. One of the things that has happened dramatically since COVID, okay, we could say since COVID, right, since 2020, or you could say the real drop-off happened in 2021. So you can think about for yourself what happened in 2021, what's happened since. But clearly, the amount of homes purchased by foreign buyers has gone down a lot. Now, this could mean that the global economy is really suffering and people just out there just don't have that much cash as they used to throw at this. It could be because America's not seen as a safe haven any longer. It was seen as a safe haven for a long time. All the way up right here until COVID. And you can see, right, 2021, man, just a drastic drop off in foreign investment, foreign buyers of American real estate. So people might see this. There's two ways to interpret this. You could look at this and say, all right, well, must be the global economy. Okay. We might be able to say that. It might be true. Or maybe it's, the administration that took over in 2021. Maybe people don't trust that or the way that went down. Maybe that's part of it. Okay. Maybe. But here's one thing you can't argue. For sure, if these levels were the same as they were in the past, what we were just talking about, where home prices were up 4.1% and sales were down 5.4%, those numbers would be very different. They'd be very, very different if we had this level that we've had in the past of foreign buyers. So what is that doing? It's actually another thing. How many things have we had to pile onto this market? High rates, for a long time now, 2 years of high rates, high interest rates, high prices. Everyone's saying the market's going to crash. All these different headwinds with lending, the tightening of lending, craziness, all this stuff. And we have all these international buyers who are no longer in the marketplace. And at the end of the day, we're still talking about how prices went up 4% year over year. So can you imagine what this would look like if those buyers were still in there? So the fact that they aren't in there, what does that mean? That means prices are lower than they should be. As hard as that is to accept, when you go and you look at the price tags out there, prices are much lower than they ought to be if there was any kind of synchronicity with this. Now, what happens, and I'm just going to pose the question, what happens when these buyers come back? What if the other side of this graph looks like this? When those buyers come back, for whatever reason, whatever the reason is, what happens to home values? Man, that's huge. Huge to understand this. How all these things have been dumped on top of the real estate market, changing in realtor compensation, lawsuits, all this stuff. So much. Look at how resilient it is. I still believe, and I'll say this while we're on real estate, I believe that real estate is still the most essential investment for every single person. It should be your number one thing. Should you be worried about a 401k or any buying stocks or anything like that until you own a home? No, that's my opinion. My opinion, that's the most important thing, because you look at owning a home as part of your retirement strategy. Once that thing's paid off, much easier for you to retire. And there's a direct correlation between the average age that people pay their home off and the average age that people retire at. It's just right there, the same. So, yes, real estate will be, I believe, the safest place to be. I think it will be the strongest place to be. It's also less likely to be whipsawed by any news that may happen. For example, we talked about the attempted assassination on Donald Trump. If that had been successful, stocks, crypto, all these things could see wild swings in a day or two. It's not going to happen in real estate. If one person is elected versus the other, you might see wild swings in stocks and crypto, bond markets. You're not going to see that kind of stuff happen in real estate. I still believe it is the safest asset class and the most important, should be the primary focus for everyone. First thing you do is buy a home. All right, let's take a look at the San Diego market. By the way, we are live here on the Book of Faces, LinkedIn, YouTube's. If you want to drop a comment, if you want to say hi, if you want to ask a question, feel free to do so. And I will check back on that in a bit. Okay, so we're looking at Altos here. We're looking at San Diego, city of San Diego, not the county, city of San Diego. I look at the same thing every time because you've got to compare apples to apples when you're using data. This week, median list price in San Diego City, about 1.4 million. Market action index at 57, which is lower than it was last month at 60. Still strong, still seller's market, but not like we saw in the 90s and stuff. We're not like that anymore. We're in a much more balanced market. And I would say it's starting to tilt a little more and more towards buyers on most properties, except for those really sweet turnkey properties in those great locations. There's going to be a frenzy for those in any market in San Diego. So you look at the average listing and average condition, it's more of a buyer's market for that listing than it has been in a very long time. And that should be seen as opportunity. And in a lot of cases, it is not, because most buyers don't have the experience to understand that. So let's take a look at some of the important statistics here. The most important one, price per square foot. We've seen this on the decline, down from 804 in April, early April, and on 777 right now. So down 4% or so, price per square foot. That tells us that it's basically, that's a sale. We rarely see that in San Diego County. And this is San Diego City, but we rarely see that in the San Diego area, either Southern California. We can even talk about Temecula and places further north. Do we see a sale like that, price per square foot? Also notice average days on market increasing a little bit, 44 to 49. So a little bit longer to get these homes sold. Price decreases are going up. So 28% of listings in early April had a price increase, now 39%. That's sellers finding out where they're at, right? Inventory, you see here, just on a steady climb higher from 417 in early April to 670. So we're seeing a pretty steady increase in inventory. This is what every buyer has been begging for so long. Hey, I want to see more inventory. I want more options. I want to see more homes. There's only 3 homes on the market, and I've seen them already. So if we have more inventory coming into the marketplace, that should be seen as a positive sign for buyers. Okay. But Derrick, what are the actual threats? What are the threats to the real estate market? Threats to the real estate market are the same as the threats to any market, and that is massive supply hitting the marketplace. If we look back at what happened in 2008, that's exactly what happened. We had massive supply hit the marketplace. Where is that supply going to come from? I have not found an answer for you. In fact, every single thing that I look at shows that supply is being choked off. And that when we see this increase in homes being listed, a lot of my opinion on it is that these are people who've been wanting to sell for some time. And they're just finally like, okay, I guess let's sell. They wanted to sell a year ago or 2 years ago, but prices kept going up, and it was hard to buy on the other side because rates were high and they had a 2-something%. So they've just been holding on. Then eventually people are just like, okay, we meant to move a year or 2 years ago. Let's go. It just gets to that point. I think a lot of what we're seeing is that. That's my opinion. I have absolutely no data to back that up. That's just my opinion from people I'm talking to. Now, if we look at the market action index, it's gone from 67 at the beginning of April down to 57 now. So you're seeing, if you're a buyer, these are the things you want to see. You want to see the market action index going lower. You want to see price per square foot going lower. You want to see inventory going higher. That's what you're hoping for if you're a buyer. Maybe if you already own real estate or if you have a big portfolio of real estate, you don't want to see that. But if you're trying to buy real estate, that's absolutely what you want to see. So my suggestion for everyone would be the same. Make home ownership your primary goal. Don't complicate it. Get pre-approved. See what you're pre-approved for. Go look at homes. Run numbers. When you find something you love and the numbers work, pull the trigger. Do it quickly. I have a new VA buyer, who had scheduled to go see a property. Before they got to go see it, it was under contract. And what was my advice to him was, hey, make note of that. You identified that property. You wanted to go see it. Lots of people agreed with you on that. And someone got there quick enough, wrote an offer, and got it accepted. When you see something that's good, you still got to jump on it. You still got to jump on it, because there are a lot of people in the buyer pool, but everyone wants a deal. And there's not as many deals out there. Well, I think that's about to start changing. I think you can make your own deals too in this market by just simply negotiating with properties that have been on the market for 60 plus days. You can go and negotiate. None of these people are like upside down unless they just bought it. I mean, if they bought it a year or plus ago, they're in the green. They're good. They should have the room to negotiate with you. So I would highly suggest, thinking about that as part of the process for you. That there's a lot of room to negotiate right now. We don't know how long that'll last, but a lot of it depends on, that's right, this right here, mortgage bond market. So, what's been happening here on this chart, and we can see, we mark, this is the bottom of the bond market right here, right? And this is where rates hit 8% for the second time. And we got a really nice bounce out of that and just haven't been able to reclaim that. It's just been sideways for so long here. But right now, as it stands, we have two things going on. We have a premium bullish order block right here, and then we have a premium bearish order block right here. And price is just kind of going back and forth. But while it's doing that, we're making higher lows and higher highs. Now, this rejection up here, you'll note it took a lot of days for sellers to get that price back below that. I mean, that's a lot. That is a lot of effort, and price still hasn't moved much lower than this. So we would call that a good sign. We would say that is a good sign that, while there are a lot of sellers at this level, there's also a lot of buyers, and the buyers are not going away easily. So I still think it's likely that we will beat this thing. And when we do, it should look something like this. We go up in here, we do this thing, we get a big clear separation, then it becomes support, and then we go like this, right? This is what I think is likely. Now, why is this important? Because as these bond prices go higher, mortgage rates go lower. And about every 75 basis points or so is 0.25% in rate. So if this is, this is probably 0.5% in rate just right here, just this next move, maybe a little more. And that's just right on the table of the easy pickings. There's a lot when we really zoom out on this chart. You can see how low, I mean, look how much this has gone down. It's just fallen off a cliff. So there's a lot of room for this to bounce, a lot of room for this to go higher. What do we need? We need convincing inflation reports, right? We need inflation reports that are good. And we need a Federal Reserve to basically give bond buyers the green light. That'll do it. So this is what we're waiting on. In the meantime, we're just going to continue to monitor this and see what's going on. A lot of people who are looking at refinancing right now, and they're kind of like, I want to wait for lower rates. I understand. I do. I understand. It's very likely we're going to see lower rates. How much lower and when? We don't know. But lower rates are on the roadmap. When buyers start to say that, though, that I tend to disagree with. I want to wait for lower rates to buy. Because you like making things difficult on yourself? Or, what's the logic behind it? Well, I want a lower payment. Okay, that's not likely to happen. You got to understand that people shop for homes based on payment. So if I was willing to offer X on that house to get the payment right at $5,000 a month, which is my max, but then rates drop, do you think my offer is going to go up? Let's say I missed out on that one and then rates drop. What happens on the next one? When people find the home that they want, a lot of times they'll offer up to their full budget if that's what it takes to win the home. And if rates do drop significantly, that's absolutely what's going to be taking place. We've seen it before. We don't need to guess. We know. That's what's going to happen. So as a buyer, I don't agree with the logic behind I'm going to wait for lower rates to buy. Because if you really think rates are going lower and you can qualify for something that you can afford, you should buy now and then refinance when rates go down. Get today's prices and tomorrow's rates. Win-win, right? I mean, if you're right about rates going lower, that could be something that can help you later instead of something that's a problem for you later. And something you have to pay rent from now until then. Just want to get away from paying rent. That's the key. Get away from rent. Get away from it. Don't pay it ever again. This is my most important message. Okay. Now, we're going to take a look. We're going to go into the stock side of things. By the way, I'm not going to do a live rate pools today, but FHA, VA, high fives, low sixes, rates are really good there. Conventional, mid to high sixes. High balance, though, is still in the low sevens or high sixes. Jumbos, 15-year jumbos 6.25, 30-year fixed jumbos 7 1/8. These are just rough ideas of kind of where things are today, just different rates that I pulled today for different people. So rates are not that bad. They're not screaming good. I know a lot of people ask me, hey, when are we going to see rates in the 4s again? When are we going to see rates in the 3s again? When are we going to see rates in the 5s again? We've seen the 5s. We've touched the 5s. 4s we could see next year. We could see 4s next year. That wouldn't surprise me. We could see 3s the year after that. We could see 3s at the end of next year. That's all possible. I don't necessarily think that's what's going to happen, but it's definitely possible. Just depends on the level of involvement of the Fed. Are they going to buy bonds like they did last time? Probably not, but maybe. If they just lower the overnight lending rate to 0%, will that get us there? Not that far, probably. Get us to the 3s. Won't get us back to the 2s, though. So a lot of different things could happen here. I believe what we're going to see is 4s next year, 3s the year after that, and that'll probably be the bottom. And if we're going to make a cycle top in real estate, we're still going to need some form of inventory to hit the marketplace. I still can't tell you where that's coming from because I don't know that it exists. So let's jump over to stocks. Okay, so we got here. Cool. All right. Got on time. Cool. All right. So let's jump over to stocks. Now, I've been saying that I just want to preface with this. When we talk about stocks, a lot of people have investments. A lot of people follow what we're doing with Tesla or what I'm doing with Tesla and Bitcoin. My two main investments, trades, I guess you would say. And I've been saying this for a while, that this bipartisan legislation, it's in the Senate, has a really good chance of coming to fruition. And if it does, it is going to mark the cycle top in stocks. Okay? Just like it did. Remember when we found out, and no one really knew, that there were Federal Reserve governors who were trading stocks? And there was like no rule really against it, but it was just so obvious the conflict of interest that no one did it supposedly. But then we found out a whole bunch of them were doing it, and they quickly said, hey, you can't do that anymore. And that was the cycle top. And stocks sold so hard after that. I mean, so hard. And it makes sense because think about it. If you are an investor or you're a hedge fund or whatever, you're buying stocks, you're investing in stocks, and you believe or you know that the Fed had incentive, the governors had incentive to keep prices higher because they were in the trades along with you, and then that incentive is now gone, of course there's going to be a sell-off. Of course. The same thing is setting up with the stock market because of this. Bipartisan legislation to prohibit lawmakers from profiting from insider knowledge, from owning stocks. Why is this so important? Well, one person. You thought Warren Buffett was the best investor in history? Oh, you know nothing. The best investor that we've ever seen is Nancy Pelosi. Now, how could she be such a good investor? She's savvy. There's a background in finance. Did she run a hedge fund? No. Sits on a lot of committees, though. Speaker of the House for a long time, decades. Knows a lot about what's going on. There's entire sites, Twitter accounts. There's entire portfolios that have been built off of just copying the trades that she's had to disclose. And this is one of the websites. Tells you everything she's done, what she's bought, what she's sold, when. Not wild. How much she made. She's made literally hundreds of millions of dollars doing this. It's obviously wrong, guys. We've known this for a long time. You and I trade a stock with insider information, we go to jail. Martha Stewart come to mind? She went to jail. Nancy makes bank. They did the same thing. In fact, I would say what Nancy's doing is far more egregious, but it's not illegal. See, illegal and unethical are not equal. Many things are legal, but unethical. Many things may be illegal, and may be ethical. That's a longer conversation. But long story short, this is coming. And when it comes, when they say, hey, it's here, or when the legislation passes, when it's becoming effective, right there, right then and there, that is when I expect us to have a cycle top. How far are we away from that? I don't know. So we're going to get into stocks. All right, let's see. Do I have anything else on this page I want to talk about? No, let's get rid of this. All right, here's the S&P. Okay, is this the daily chart? Give me the daily chart in the S&P. Okay, so there has been a couple of bearish indicators lately that we want to be aware of. We also on the S&P, we came to fruition here on standard deviation. So let me get rid of these trend lines. Why are these even here? Those are old. So standard deviation here, -4 is fruition. That's usually where most moves end at -4 or right around there. And so we got to -4 on this one here on the daily chart. So clear bottoming structure, boom, all the way up to -4. And now we're starting to reject. And you can see even right here, right now, rejecting right at that -4 level. So this would lead me to believe that we needs to face some sort of pullback here. We need to see some level of pullback. As you notice, we haven't really had one. Okay, we haven't really had one of any significance, and that does not make sense. Okay, let's look at what's one. Okay, here's a good one. So this is a COVID low right here, and then after the COVID low, we went up and made this high, and we pulled back. Where did we pull back to? Let's see. I can tell you right now, just by eyeballing it, it's going to be almost exactly 50%. Exactly 50%. Look at that. Okay, but it was still bullish. So what I mean by that is stocks went down. We went from 4,800 in the S&P down to 3,500 in the S&P, a massive, massive drop. But it was all just healthy, a healthy retracement. We went from the bottom to the top. They came back, they brought it back halfway, and then we resumed going higher. So this right here, ugly as it may have been to live through, it's actually healthy and needed. And we just haven't been seeing much of those. Now, perhaps we can say, if we go from this low to this high right here, see, even that didn't get to the 50%. And I wouldn't even qualify that. But so we just haven't had a pullback. Look how far we've gone. We've gone from 4,100 all the way up to 5,600 without any kind of substantial pullback. So what I mean by that is that it's just due, and I'm not saying doom and gloom. I'm not saying, that if this happens, it's going to be bad or it's going to be a sign that something bad is taking place. Nothing like that. Just saying that we need it, because the longer we just keep going up and up and up and up and up, the more we set ourselves up for a crash. When we have these pullbacks to the halfway point, that is healthy. That signals a good market. That signals both sides of the equation are making money. And you need that. You can't just have this forever higher stuff. That is what crashes are created from. So I'm actually pleading for a pullback just to flush this thing out, hit the reset button. Where do we need to get to if we're going to see that? Well, I think at a minimum, we need to see about 4,800 in the S&P. So if you look at that right now, let's see, it's about 1/7. That's a 15% correction or so, a 15% correction. And that's not too bad, right? That's really not that bad. It'll hurt because we're so used to seeing it go like this. I'm just saying to be prepared for this as a possibility and to know that it's not necessarily a terrible thing. If it happens, it can be a very healthy thing. It can be. Does that mean that it's not a bad idea to reduce risk? I am hedging risk. So I have long-term puts on the NASDAQ, on the NQ, that I believe, between now and let's say the beginning of the year, we're susceptible to some major pullbacks. Why? We have an election. We have uncertainty. We have presidential candidates being shot in the head, nearly assassinated. We have, a lot of these uncertainties could cause what we refer to as a de-risking event. What is a de-risking event? This is where big money sits back and goes, you know what? There's a lot of risk on the table. We have geopolitical issues. We have wars going on. We have World War III on the brink. We have China collapsing. Maybe they start to get frisky. We have, uncertain future between very polarized, opposite, presidential candidates. One of them's, had an attempt on their life already. I mean, we have a lot of things. So maybe if I'm a hedge fund manager, I look at this market and I go, you know what? Locking in gains. Locking it in. Because if you go back to the beginning of the year is down here. On the NASDAQ, 16.3, we just hit 20,000 plus. If you go back to the beginning of the year, over here on the S&P, we're at 4,700. We just hit 5,700. So most fund managers, most hedge fund managers, they're probably very, very green right now for the year. And it wouldn't surprise me if they decided to just say, you know what? What's the saying? Sell 'em May, go away. Just go ahead and say, you know what? We're going to sit this out for a little bit, see how it shakes out. And maybe some of them will not sit out. Maybe they'll just do what I'm doing and just hedge and just say, you know what? I'm going to buy insurance. I'm going to get a put on the market, which will make money for me. If the market goes down, I will use that to buy more shares of the things I'm invested in long-term. Should it come to fruition, if the market keeps going higher, that thing expires worthless and my underlying assets are much higher. So it's fine. Something to think about. Talk to your financial advisor if you're interested in de-risking, and just say, hey, what are some options to de-risk? And they'll probably tell you about that option, getting a put or something like that, buying some insurance, as opposed to taking and selling your stocks, which is one thing you could do. But then what happens if they just keep going higher? Now you're buying back higher and you're just putting yourself in a worse position. It's just not you got to be careful with it. But I want you to be aware that we haven't had this reasonable pullback yet. I keep looking at these charts and going, gosh, we're so due, we're so due, we're so due. And then we finally start to get a bearish structure here on the lower time frames where it actually looks like, okay, we could now start to lose some of these important support levels. And if we do, there's just a lot of potential for downside because we haven't had a real correction. And it may happen very quickly. You know, it could happen in 2 or 3 days. You could see the stock market have 2 or 3 really bad days in a row. And that might cause people to panic. Okay, if those things take place, I promise you I will make videos every day to walk through it, to help keep you from panicking and making an emotional decision that costs you a fortune. I'll never forget my grandpa, 2001, a lot of people don't know, 9/11, that we had the dot-com bubble, then we had Y2K, then we had 9/11. And 9/11 caused stock market to get shredded to bits. My poor grandpa saved his whole life, sold down 40% because he just couldn't take the pain anymore. He gave 40% of his life savings. And I remember when he told me that, I was like, oh, shit. I wish he'd called me because I would have definitely told you not to sell. Don't get out. Not in that situation. When panic is taking place, that's when you buy. You want to pull the trigger when there's panic. Do not run away from that, okay? If you were going to de-risk, you do it before the panicking takes place. That's why I'm telling you now. If you feel like you want to lock in some gains, if you feel like you want to de-risk, do it now. Don't wait until it sells off 1,000 points and then go, oh man, I got to get out. That's the exact wrong thing to do. Talk to your financial advisor. Okay, I'm not a financial advisor. Tell them what your thoughts are. Tell them what you're trying to do and accomplish. Let them help you figure those goals out, okay? But just be careful out there and don't be surprised if we see the stock market roll over here in a major way. Let's see, we'll do, so that was S&P, NASDAQ. Okay, here's Bitcoin. All right. Here's what we're facing on Bitcoin. Daily bearish order block up here, established on March 13th, was tested once, twice, 3, 4 times. All rejections to a new low, a perfect bottoming formation right here. Okay. It looks like this breaker will get retested again. We'll see. We'll see. Maybe it'll just stop right here in this fair value gap and we'll resume higher. Maybe we'll come back to this breaker and we'll find out. We've already tested this breaker a couple times. So I would expect this to resume higher from here. It doesn't have to. My target right now, best case target for Bitcoin this year is about 105,000. That's the best case. I know there's a lot of people saying crazy numbers, hundreds of thousands, all that stuff. Guys, shut up. I mean, if that happens, it would be a complete miracle. There's no way you would have been able to predict it. So shut up. Now, the reality is new all-time high. I'd say that's pretty likely. Why? Because on this move down here, we got to -2 on the standard deviation. It has to get to -2 in order to feel that's the earliest stage of completion. So we reversed with a perfect bottoming formation at the earliest stage of completion on this downside move. And it took a while for this downside move to play out. So that's all together pretty bullish, meaning price should go higher. Now, I think we're going to at least see 84,000 to 87,000. And our best case is 105. And anyone who's telling you numbers other than that is just full of it. Trust me, okay? They're full of it. And I hope they're right by some miracle, but they're full of it. Those are realistic price targets. I want to see people like dumping huge amounts of money in. At this stage, you missed the best opportunity to accumulate right here in this zone. As this was happening, that was the best that we're going to see, I believe, this cycle. But again, who knows what's going to happen? Could this go to 0 tomorrow? I mean, theoretically, no. But could it get hit really hard by some news? Even if it was fake news. If someone who had enough power were able to leak a story and say Bitcoin the Bitcoin network has been hacked. thought impossible, but proven wrong, it would go down 50% at least in a day, even if that article is bullshit. So is this asset susceptible to things like that? Yes. So should you put scared money in here? No. If you have a high conviction in what Bitcoin is, how it can save countries, the world, freedom, you understand money, fiat, currencies, every single fiat currency that's ever been created all went to zero. Ever. Always. Every time. Because the engineering of it is basically, it's not real. We hand you a piece of paper and we tell you it's worth something. There's no intrinsic value and there's no scarcity. There's no lack of supply. The government can print as much of it as they want, can make as much of it as they want. It's not backed by anything. And Bitcoin is just, it's finite and it's indestructible. The computing power of Bitcoin is so massive. It's crazy. So is there value to this long-term? I believe so. Yes. Heavily invested personally to a scary degree, but I have high conviction and I believe that Bitcoin is here to save humanity from the pitfalls of fiat currency. That's my belief. And I believe that it's going to do that. I believe it's going to take a lot of time, but it'll happen faster than you think. So that's where I'm at. Now, do I trade it? I don't. I'm invested in it. I will take a put if I feel like we're in a spot, like if I think we're going to lose some ground and it might be major, I'll take a put on a small put just to raise some more money so I can buy some more. Like right here, small put here. This one's really obvious. The double fair value gap, with the wick down, that was really obvious. To go to put there, made a little bit, put it back in. But I don't trade it. I'm invested in it. I've been investing in it this whole way. I mean, I started way back here in this market, okay? Way back here and bought all the way down here the whole time. I was buying this whole time, just holding my nose and buying. So I've earned what I've got, and I believe that what happens next is good. Now, today, the Ethereum ETF was approved and traded for open trading on the stock exchange for the first time. So Ethereum now has an ETF, but Bitcoin sold off huge today. You saw the big red candle here. What the heck? Is money getting siphoned from that and going over to Ether? Well, Ether only up 40 points today. I mean, the biggest nothing burger of all time for such a humongous event, for there to be a straight spot Ethereum ETF that you can go and you can buy, and literally just ETH. That's the ticker, ETH. You can go and you can buy it in your portfolios. You can have ETH. For ETH price targets, you're hearing people say, 6, 8, 10,000. That's all possible. That's all possible. I think we're going to be closer to 5 to 6,000, but it's most likely this is the one for as far as cryptocurrencies go. This is the one that is sort of owned by the banks. Now, typically, like most like Bitcoin maxis like myself, we don't like that at all. We hate the fact that the banks are involved, but it does sort of like tell you that this is a horse that's probably going to win. The banks are behind this, okay? Chase is behind this. Big banks are involved in this. They have Vitalik, the creator, who's like the CEO. They've changed things multiple times as far as, quantity, available, protocol, the way that things work with this has changed multiple times. And that's what most people like about Bitcoin. You can't change it. It is what it is. There's nothing you can do to change it. There's no one who can come in and make changes to it or adjust things, or there's no way to have politics involved. You can't have that. With ETH you can, but if you look at it, the reason why I own a decent chunk of it is because it's set up for success. It's got the Warren Buffett grail attached to it. Like Buffett is a self-fulfilling prophecy. If he announced I'm buying Occidental, then it's going to go up. As soon as people figure out Buffett's buying it, everyone buys it. This is a self-fulfilling prophecy. We don't even know how good Buffett really is because he's been self-fulfilling prophecies. They just sold Bank of America, by the way. And so I believe that ETH is one of those. Okay. Now the other one, here's Tesla. Let me make sure there wasn't something I wanted to say. I forgot about that. Okay. Yep. Top of this cycle is going to be when Congress officially can't trade. Debasement of currency leads to higher prices. I do expect a wild ride in crypto over the next 6 months. And remember what we said earlier. Trump is very, very pro Bitcoin. He has been orange pilled. And that is a big, big deal. If Trump does get elected, Bitcoin going to go to that higher target. It's going, yeah. And it might be one of those instances where it actually goes up so much that it'd be worth trimming. It would be a massive, massive run on the shorts, huge liquidation event on anyone short Bitcoin. And then there would be FOMO buying like crazy. And could it get up into the 100, 50 range or something like that? Maybe in that case, that's the absolute craziest case. But if it does, I'm telling you, that's a good time to trim it. That'd be a good time to trim it, let it come back in, find some support somewhere, and then buy back there. At least that's how I would be playing that personally. So that's another thing that's factoring into the crypto side of things. All right, now let's look at Tesla. Tesla, what was the after hour? How did it finish after hours? It was bad. They had earnings today. Wasn't good. I have Tesla puts that had some last week, some this week as well. They both printed, which is good because my underlying shares went down quite a bit. So it was good that I had those in place to sort of hedge. I liked where we were here, C -2. We came to -2. So that's the very least point of fruition. But I do expect this thing to go higher. Tesla broke this multi-year downtrend. It's very likely that we're going to see that retested. There's also a couple gaps that need to get filled here just for completion overall. And so those come down to $212. I've got an order in to buy at $231. I think it's likely to open up below that tomorrow. And so I'll actually get it cheaper than I was willing to pay for it, which would be fine. And I'm starting to buy. I'm going to be starting to buy back more on our way down. And -4 is down here. Look at this, right on this support level, which was our former resistance level that has not been retested yet. So if price does get down to this 205 level, for sure it's a massive bounce off there. Doesn't mean it's going to go higher forever off of that, but if we do get down to that level, it's going to give us a massive bounce that's worth trading. So we'll see. We'll see what happens, but I'm still long-term Tesla. I think it's going to be the most valuable company in the world. I think they're going to make everything. I think they're going to make computers, airplanes, toaster ovens, freaking everything. And it's all going to be amazing, just like their cars are. And I think that's the future of Tesla. 10 years from now, 15 years from now, 20 years from now, they're making everything and they're making everything awesome. It's American engineering and it's amazing. There are the most American-made cars on the road. They are the safest cars ever tested. Safest. They're the smartest cars, most futuristic, coolest. They have the most uncomfortable seats, though. That's one thing. If the future versions of Teslas, more comfortable seats, people would probably appreciate that. Big guys like me would anyway. But that's where we're at. So Tesla, expecting a pullback. Again, these pullbacks are healthy. If we were to take this, you know what? I haven't measured this yet. Let's just do it for fun. This bottom formation right here to our recent cycle high. Oh my gosh. Oh, look at that. The 50% level right at 205, right there, right on the -4, right on the support. Just another piece of confluence for that trade. And I was already planning on loading up if we get down to 205. But now knowing that that's the 50% retracement for this macro move, yeah, just further evidence that it's a must buy at 205 for me. For me and the TA that I do, it's a must buy at 205 if we get there. We may not get there, but in after hours, I did see when we closed today at 246. I did see in after hours it was at 228. Now, after hours trading, it doesn't necessarily translate to the next day, but I do think we're going to see a red day tomorrow on stocks for the most part. I think we're going to see it's going to be a little bit of blood tomorrow. So that said, let's see. Do I have anything else on the list? Pull up my list. Ask cows. Okay, let's see. What's going on, my friends? Who's out there? I'll shut this sucker down. Looks like I got some text to get back to. You guys know what to do. Your boy is not busy at all. If you ever wanted to refer me a friend and family member who might be looking to refinance or buy a home, no time. But I would appreciate it more than right now. Guys like me don't like to be slow like this. Makes us feel weird. We want to be working on stuff. Give me a call, shoot me a text, send me an email. I will be here. I will continue to do my thing. I will shoot you straight. I will hook people up on their home loans. I'll do podcasts occasionally and let you know what I think is going on, what you should be prepared for, and the mistakes that you shouldn't make. Buy a home as soon as you can. That's my advice. Yes, I'm a loan guy. Look, most people hearing this aren't going to use me for the loan. Do it for yourself. Do it for your family. Have a great night.